You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com. Gold, crude oil, corn, soybeans, and more. With so many tradable products, the futures options market can be an intimidating place. How can you possibly keep track of the latest trading developments across so many different products? Don't worry, we've got you covered. Welcome to This Week in Futures Options, the program designed to help active futures options traders stay on top of this ever-changing marketplace. Each week, we'll break down the top trades, hot products, volatility explosions, and much more. This Week in Futures Options streams live, so be sure to check out our live stream via the Mixlr app. That's MIXLR. Or join our live chat room at mixlr.com/options-insider. Whether you're an experienced veteran or a newcomer looking to separate the wheat from the lean hogs, This Week in Futures Options has the information you can't find anywhere else. This Week in Futures Options is brought to you by CME Group, the world's leading and most diverse futures and options exchange. For more information and educational resources about futures options at CME Group, visit cmegroup.com/options. And now, get ready to break down the latest futures options trading activity. It's time for This Week in Futures Options.
All right, everybody, that music means we are back once again for TWIFO This Week in Futures Options, the program where the name says it all. We're going to break down the week that was and indeed still is on the futures options side of the fence. My name, of course, Mark Longo from theoptionsinsider.com, as well as, of course, from the ever-compelling, at least we tend to think so, Options Insider Radio Network. Reminding you, of course, if you like what you hear, TWIFO, any other show we do on the network, do go ahead and rate and review. It really does help new people continue to discover the network, the show in these troubled times. And, of course, if you want more show in your lives, and hey, who doesn't? You want your broadcast week to continue after Vol Views on Friday. You want additional shows throughout the week, like pro Q&As. You want awesome giveaways. You want live access to this, everything else we do. You want 200 plus exclusive shows we've already got up there for you. Where do you go to get all of that freaking stuff and a whole bunch more? TheOptionsInsider.com/pro is the place to go to begin your journey. Join us on the dark side. It's a fun place to be. You get a sweet mask. Your breathing will change. Red lightsaber, all sorts of fun over there on the dark side of theoptionsinsider.com/pro. Let's see who's joining us in the CME Group hot seat today. He's never on the dark side. He's always on the light side. Our old friend, Mr. Dan Gramza from Gramza Capital Management. Dan, welcome back to TWIFO, sir.
Well, thank you very much, Mark. I'm really excited about exploring some of these markets today. What an interesting day we have to look at.
We do have a fun one in store, so let's get to it. A little bit of the old movers and shakers report.
It's time to find out what's rallying on the light side and falling to the dark side at CME Group this week. It's time for the Movers and Shakers Report.
All right, everybody, welcome to the Movers and Shakers Report, the portion of the show where we break down everything lighting it up to the light side, a.k.a. the upside, and then over on the red saber side to the dark side this week over there at CME. If you want to see this report for yourselves, follow us at Options, follow CME on Twitter. We both put it out right before showtime over there. Again, it's one of the few exclusive reports you can get access to over there at Bantix. If you want the full deep dive, we just had the creator of Quick Strike, the founder of Bantix, Mr. Nick Howard, on our Pro Q&A. He discussed a lot of the interesting nuances of putting all this analytics content out for you. You can find that over there on the pro side as well. If you like what you see, you like what you hear on this show, you want to kick the tires and explore some more, Bantix.com, Bantix.com is the place to go. Tell our friend Nick we sent you. He'll be super excited to welcome you into the fold with all the cool stuff that they're working on over there, including this, our movers and shakers report. Dan, where should we begin this week, sir? To the light side or to the dark side?
Well, I think we should begin to the light side because that's a short list.
Yeah, ain't much of it. We could barely do a top 5, sir, and not much beyond that. I think we can maybe do a top 10 if we really closed our eyes and squinted. But that's about it. All right, to the light side we go, such as it is this week, listeners. Number 5. It's kind of a quiet, sleepy week when the Ultra 30 years make it onto the list. That's up a whopping 0.62%. That's a good frame of reference, a good barometer for you out there, listeners. If something's not even a full percent in either direction and it's making it on our list, then it's probably a quiet week, at least in that direction. In this case, it is a quiet week to the light side. Ultra 30 year up 0.62%. Right behind it, hot on its heels, number 4, live cattle, up 0.79%. Number 3, still knocking it out of the park, not even a full percent. We have our old friend Class 3 milk, up 0.91%. Are you getting excited yet, listeners? This is some hot action here. Number 2, we've got platinum, up 1.63%. And then number 1 is actually a decent mover this week. We've got good old feeder cattle, up 3.84%. And I wasn't joking with Mr. Dan, listeners. We could probably extend it to a top 10 if we include the pound USD, which is up 0.03% on the week. So that's about as low as we have to go here, listeners. There ain't a heck of a lot of light side this week. All right, to the dark side we go. We can do a bottom 25 or 30 easily this week. We will limit ourselves to 5. You'll see also number 5 is already larger in terms of magnitude of movement than the top of the light side. So again, also an indicator that things are looking red this week. Number 5, rough rice, off 4.65%. It was in the exact same spot last week, off another 2.41%. So, I'm going to say it, a rough couple of weeks for rough rice out there. Number 4, our old friend WTI. I got a feeling we'll be hanging out a little bit of energy this week. WTI, number 4, off 4.7%. Number 3, heating oil, off 4.73%. So kind of moving in lockstep there, as you would expect. Number 2, nat gas, off 4.85%. It was number 2 in the other direction last week, up 11.6%. So nat gas rocking and rolling as is wont to do out there. And then number 1 with a dark side bullet this week is palladium, off 5.22% out there. So an interesting movers and shakers report this week, Mr. Dan. Kind of some weird names popping in there. We've got platinum and palladium on the metals front. Not exactly huge option stalwarts, but we do have some metals. We have feeder cattle, live cattle, and rough rice sneaking in on the ag side. And, of course, Class 3 milk. Don't forget about the dairy. We've got Ultra 30 year just peeking in on the light side there, just barely. And then, of course, energy dominating the tape. Mr. Dan, where should we begin our journey this week, sir?
Well, if we think about it from an options point of view, why don't we start with the energy, Mark? I think there's some interesting things going on there. So let's take a look at those markets.
All right, sir. Your wish is our command. To the energy we go.
It's time to tap into the deep options well of black gold, Texas tea, nat gas, and more. It's time to talk energy.
All right, everybody, welcome to the wonderful, these days, rockin' world of energy. Dan, it's like we're on the same wavelength here because I already had nat gas pulled up even before you said that. So I knew where you were going before you even said it. We're on the same wavelength now here.
I think you're right.
Dan. But listeners, if you want to see these reports for yourselves, you know where to go. CMEgroup.com/TWIFO. TWIFO is the place to go to kick the tires and light the fires out there. Once you're there, you can go into that drop down, scroll down past ags, past crypto, and then over to energy. That's the third list in the asset classes there. And then over to product family. We'll get to WTI in a second, but first we'll kick things off in the the mothership of energy vol these days, which is nat gas. That's third on the product family list. And then pick the top one in the nat gas family list. You will see a decently active week, right around the volume we would expect, close to 440,000 contracts, 433 right now, 440 the level we would expect on a week like this. Nat gas hanging out 227. Right now, it is unched on the week, which is kind of interesting. Of course, you go all the way back to last week's show, off nearly 5%. Dan, you and I have kind of been wringing our hands about nat gas for a while. Doesn't seem like that long ago you and I were talking about activity in the 7, 8, 9, and 10 calls and above. And now here we are hanging out at a 2.25 level. We were kind of mystified on it, I think, the last time you joined us. And we're still there, if not lower, Dan. So what do you make of this endless morass that is nat gas these days, sir?
Well, it truly is amazing. I heard someone the other day, and he works in the energy industry, but he and I were having a chat, and he says, it's not going to go below 2. Well, here's the thing to remember.
Didn't they also say crude oil can never go negative? Don't they say these things all the time, Dan?
Yeah, you're right. You're right. I mean, when somebody says never or it can't, you and I know, Mark, that really spells that it will.
That makes me want to buy the 2 puts right now that you say that, Dan.
There you go.
Look out below.
Mark, I got to tell you, if you go back to June of 20, we are like 143. So can this market go lower? Yes. And it was just a few years ago we were lower. So there's still some room to the downside. What it does do, it chokes off exploration, though. Although we haven't seen huge drops, not suggesting anyone do this, but I have invested in the past in drilling operations and nat gas. And when you're at this level, it's very difficult to drill new wells and to maintain profitability. So it goes back to, is somebody hedging? Have they been doing that? Has this market's been moving where it is right now from the producer side? But let's think about it from that global perspective, because that's the thing you and I have seen driving this market for so long. But, excuse me, Europe is not in too bad a shape right now. And even though we have a hell of a storm coming through the U.S., our inventory is still very heavy. We're not in bad shape. And some of the outlook looks pretty good in terms of, again, inventory and supply. We also have the Freeport export facility down in Louisiana, and that's probably not going to be fully turned on until about mid-March. And that means that's gas, that LNG that would have been exported is now being retained in the U.S. So our inventories are building here, which, decreases some of the upside movement you would expect in a tighter supply. We don't have that environment right now. And we want to remember that about a third of natural gas goes to heat our homes and cook our food, except the Northeast. They use primarily heating oil. And we use about a third for electricity. We produce more electricity with nat gas than we do with coal. And we use about a third of it for industrial applications. So the steel industry, chemical industry, huge consumers of nat gas. And right now we have just gotten to these levels that it does appear we traded just a bit below 2 yesterday, and we bounced right up from it. So buyers did come in yesterday. It was a very balanced type day, actually. And today, we're starting to see some movement. We're around 230 or so. So the structure is for a move to the upside. That's what I'd be looking for tomorrow. Because how do people want to go home over the weekend with nat gas? If you and I look at this, we'd say, well, geez, it's so cheap right now. If we're short, should we be taking some profit? Or if we're looking for a place to buy this market, we're at those levels. So what's going to be fascinating to me is how do we finish tomorrow up? Does it finish to the upside, which is what it implies? And that would imply maybe sellers profit taking, or maybe it has gotten cheap enough. The big deal for this market to the upside is 240. Can we get above that level? That'll be the first challenge. Can we go into this weekend above 240? The next biggie is that it's in 10-cent increments, the 250 level, the 260 levels. Watch if the market moves up there, how it moves up there. One other thing I would add here, if you and I were just thinking about the price action, that would mean the first 3 days next week is where you'd want to start kissing that 250, 260 levels. If we don't, I would look for a sideways move. Or if tomorrow we don't close above 240 or we have an inside type day, I think that sets the tone for kind of a neutral market, not necessarily a weaker market, but more of a sideways market. So nat gas is really just amazing to me where we are. And like you said, Mark, not that long ago, we were talking about bigger numbers than where we are right now.
Yes, much bigger numbers than we are right now, listeners. And here we are closing in tomorrow, the 1-year anniversary of the invasion, listeners. So who had the 2 handle 1 year after the invasion? Well, apparently the market did right now, because that's pretty much where we're hanging out, listeners. A lot of our live chatters pointing out they still can't believe nat gas is hanging out around $2. Yeah, a lot of people are in that same boat. They also point out kind of what you were mentioning, Dan, about the drilling names, and just a lot of the equity names that are related to nat gas do seem to have a bit of a lag between what's going on in the nat gas market and what's going on in these related names. And that also is true. We were just talking about that on the option block. I think the name we were talking about there was LNG, but you could pick your poison. Tell there's a bunch of names out there that are nat gas names that are kind of doing some interesting things out there, even with nat gas here at the 2 and change level out there. Did you have a 2 handle by the 1 year anniversary of the invasion? Listeners, I'm curious. Hit us up. Let us know out there. In terms of action, like we said, about 440,000 contracts, close to it on the tape right now. So pretty active. And nat gas trading just like an equity. In fact, almost 23% of the action this week is in the March contract that is going away in a couple of seconds. In fact, it might have already expired right after I ran this report. So I'm sure if I re-rack these numbers, I might not even be able to see the March numbers. The 2 put in March doing nearly 20,000 contracts this week, 19,920 contracts. Intriguing stuff. I won't even mention the skew. We have an 85 bid. 85% discount, I should say, to the puts, and a 104% bid to the calls. Obviously, that's going away in a couple of seconds. So that's a meaningless number, but a fun one nonetheless. Instead, let's go out a little bit. Let's go out to April. That has about 33 days left to go. That also did about 21% of the paper this week. So April, no slouch. What is the volume? You might be wondering in nat gas outside of the 325 for the contract expiring in a couple of seconds. If we dial that back a little bit, we're out about 30 days. We go to April. That's about 92. Still very frothy, very active. Up about 5.25 points this week. So nat gas showing no signs of slowing down, at least from a vol perspective, actually ticking up this week, closing in on triple digits again. So everyone's, VIX is at a 20 again. How crazy. Well, here's nat gas hanging out close to triple digits. So if you want some vol, you could do worse than the energy markets. Just beware. Nat gas been known to run some people over the last year. What's going on from a skew perspective? We got some action out here as well, listeners. Last week, the puts were where all the action was. 6.8% bid were the puts. This week, catching a huge bid, nearly 12% bid are the puts. So you're talking, listeners, a 92 is the at-the-money vol in April. If you want to buy a 25 delta put in April, remember, we're hanging out at a sub-240 level. So 25 delta put's going to get you down around that 2 handle. I was joking before about gobbling up the 2 puts, but apparently that's where the bid is. 12% premium over that you have to pay. So you're talking pretty much a triple-digit vol at that point to buy a 25 delta put. The calls, nobody wants them, Dan. The calls, 3.3% cheap last week. This week, nearly 8% cheap. Dan, if I had told you, outside of the context of what we know is going on in the broad market, if I just told you, hey, Nat gas is going to hang out sub 240, and the puts would be bid all day, and the calls would be offered. You probably would have laughed at me, right? You said I was a crazy person, but that's where we are this week, Dan.
Correct. I would have. I mean, it's because logically we think of these levels as being so cheap. This is like crude oil being at $10 a barrel. And we've done that about 5 times since 1960. It's a rare occurrence. And when you see us at these levels, it's just a natural feeling to say, okay, this would be a logical level for buyers to participate. Those calls should be bid. That's what you're looking for. The signs that maybe somebody else is saying this is cheap and it may be a time to participate. I just think if this is true, that it is cheap and that we expect movement back to the upside, it should happen within the next 2 to 5 days. And if we don't, I'm looking for that sideways move.
Yeah, I did not expect such a marked bid to the puts, but that's where we are this week. Listeners, right now, what would you rather have, a 25 delta put or a 25 delta call? In nat gas, hanging out right a little bit shy of 240 in that April future. Clearly the market, we know which way the market's leaning. And in terms of action, backing this up, maybe we have the 1 3/4 puts in April doing about 17,000, actually no, about 15,000 contracts this week. 7,600 today. Obviously, a truncated holiday week. I forgot to mention that at the top of the show. We're seeing nat gas doing about the amount of paper we'd expect to see in a normal week, 440,000 contracts, but we're missing a day this week. So that's actually blowing the doors off from a volume perspective out there in nat gas this week. The big day today for the 1 3/4 puts in April, about almost 8,000, about nearly 4,000 yesterday and almost 4,000 on Tuesday. A lot of closing going up early in the week. So maybe some folks were bailing on these puts, taking advantage of these juicy premium levels. Doesn't seem to be driving the skew down any. So that's interesting. And then actually leading the dance is going out to May. The May 1.5 puts, listeners, doing 23,000 contracts already in this shortened holiday week. 6,300 today, 7,600 yesterday, nearly 9,000 on Tuesday. Looks like mostly opening on Wednesday, slightly closing on Tuesday. So 1.5 puts, almost 23,000. My goodness. That's fascinating. And there still are about almost 30,000 open on this strike. So a lot of paper here on the 1.5 puts in May, listeners. That is actually our most active contract of the week out here in a pretty active week for nat gas. Let's go back quickly to April, see what else we see out here. We have about a little over 12,000 of the 2 puts going up this week. The big day for those also today, 6,000 today, 3,000 each Tuesday and Wednesday. Back and forth, opening to closing out there on the 2 puts. And right behind it, we have the 1.5 puts. So it is just a litany of puts all the time out here in nat gas, listeners. 1.5 puts doing 11,300 contracts. The big day for the 1/2 puts in April was on Tuesday, 5,300 on Tuesday, 4,200 today, 1,800 on Wednesday. It's like opening throughout the week. We obviously don't know about today's paper, but there are nearly 18,000 already open on this strike. So could be closing, but chances are probably it's piling on at these levels. And if the skew is any indication, folks are just gobbling up these puts for days. Yeah, you got to look really hard, listeners, to find calls that are doing equivalent size. We have the 3 calls doing 5,600 contracts this week. These are in April as well. The big day for those is today. So 3,000 of those going up today. So it's not only puts trading, but it is definitely dominated by puts in terms of just sheer numbers out here. I'm scrolling out. Let's look at May. Same deal. 3 calls doing 3,600 contracts in May as well. So versus the 1/2 puts doing 23,000. I mean, it's just all puts all the time. This is fascinating. I would not have projected this. That A, that we would be at this level so soon, and B, that now that we're down here, folks seem to want nothing but puts. But that is where we are, listeners. The 2/2 puts also pretty active out here. The 2 puts in July are doing nearly 5,000 contracts this week as well. So yeah, you have to look pretty far down the list, listeners, to find action on the calls. We got the 4 calls in October doing nearly 5,000 contracts this week, 3,100 today. So there are some players in the calls, just not many. Wow, I don't know. Dan, this is fascinating. I could probably hang out in nat gas for some time, but we also have our friend WTI lighting up the tape out here in the movers and shakers. Number 4 this week, listeners, off 4.7%. So neck and neck with Nat Gas out here. So pop out of Nat Gas and the product family. We're going to go up to WTI as well. Dan, energy is clearly where the action is this week. What's catching your eye out here in the Texas T this week, sir?
Well, it's basically acting, I would say, normal. Normal in the sense we're at value. Value in this market, if you look at the last few months, really, couple months or so, I'd say going back to December, we've basically been trading between $72 and $82. We've been in a $10 sideways move. And I'm really looking for that to continue. I don't think there's strong reasons for this market to go back towards 90 or $100 a barrel, as some people are expecting, or for it to be down at 50. I just think we're going sideways because we're at value. So that means also, or it doesn't mean there's not trading opportunities. A $10 move in the futures, that's $10,000 a contract for the full size contract. And what's interesting now, Mark, is if you look at yesterday and today, we're basically at the bottom of this sideways range. So if you look at a chart, around $73 down to about 72.5 or so, you'll see, if you're looking at a candle chart, levels that buyers have come in before, the way I look at it. And today, son of a gun, we have buyers coming into that market. And it's what I call an equal and opposite. It does imply follow through to the upside. But just like with Nat Gas, the thing here is, who is that's buying it today? Is it sellers that were in there at 81? It was almost 81 just a few days ago, and it broke down to 74. So now we're seeing buyers pushing it up a little bit above $75. So is that profit taking? Is it new buyers coming in? Or we're at the bottom of a sideways range? Is this where we can expect that pop? Well, here's the thing. The way I look at it is this. If that's true, that buyers are coming in, those next 2 to 5 days are critical. If we did, again, I'm not suggesting this for anyone, but from my point of view, if we were looking to do something simple, just, let's say we buy some calls, at the money calls. Excuse me. I'd want the expiration beyond the current, and I'd want delta near 100. So a couple at least, 50 delta or near 50 delta calls or deep in the money. But if that trade is not profitable in the next 5 days, I'd give it the big adios and stand aside. Because if this is going to work, if you look at how we've moved in the past, within 5 days of the bottom of that range, we're moving higher. And that's what we'd look for here. I don't necessarily think it'd be a long-term trade, but it would be a trade that may last a week or two, because within that time period, we should be back around that $80 to $81 a barrel. And at those levels, then you look for sellers to come back in as they have in the past. So I think it's a very orderly market in that regard in terms of price behavior. It reminds me of one of the markets that you mentioned earlier, feeder cattle and live cattle. What's interesting about those markets is that you'll see institutional paper primarily can drive that. In other words, I believe what we're seeing here, if you look at price action, is we're seeing hedging. It gets around $73 a barrel. You and I'd want to, if we need to buy crude, we'd want to be putting on some hedges. And on the other side, if we're getting near that $80 to $82 a barrel, and if we're looking to sell some crude and we want to hedge it, that may be a time to consider doing that under the same criteria. If we're going to do that, it should perform within the next 5 days. So that's been the rhythm that we've seen in this market. And I just can't wait to see how we finish the week out here. And our friend, Mr. Crude.
Yeah, a lot to unpack here as well. Crude hanging out 75.5 as we're kicking off the show. Listeners, that puts it off about 1.13 points on the week. That's 1.5%. If we go back, obviously, to the end of last week's show, it's off nearly 5%, about 4.75%. In terms of action, we saw Nat Gas doing a full week's worth of volume in just a few days. WTI not quite keeping pace, 284,000 contracts. Usually on a given week, we expect to see somewhere around 400,000 contracts in WTI as well. So looking a little bit light, not managing to make it up out there. But let's see what kind of paper we can find out here. Of that, nearly 300,000 contracts. Looks like about 40% is going up in the April contract. So we're going to hang out there. Listeners, April crude 75.42 right now. What is the vol in WTI? Almost a 38, 37.90, up about 1.5 points. So again, looking frothy, obviously less than Nat Gas, which is hanging out at triple digits, but still far more, almost a 2x what we're seeing out there in the equities. If VIX was hanging out at about a 19, it would be a 2x out there. So intriguing stuff. In fact, I haven't pulled it up. We have seen a bit of a rally out there. So maybe we are back in the teens again as we're talking. We're still at about a 21 in VIX land out there. In terms of action and skew last week, and this week, the puts last week in April, nearly 5% bid. This week, about 4% bid. So the puts coming in slightly. The calls, 3% cheap last week, 5.4% cheap this week. So the calls getting cheaper. The puts not quite as bid, but still bid this week. So we have a modest equity style skew here in April crude oil. And in terms of action, it was the 70 puts. Remember I said we're hanging out almost 70.5 right now. It was the 70 puts leading the dance this week, doing 15, almost 16,000 contracts, pretty evenly split between yesterday and today. A little over 6,000 today, a little under 6,000 yesterday. Tuesday, 3,600. Obviously, no action on Monday. Back and forth opening to closing on these puts throughout the week. And then it kind of falls off for number two, listeners. We've got the 65 puts doing 7,600 contracts, almost all of that today, 5,500 today, 1,400 on Wednesday, and about 600 on Tuesday. The 80 calls coming in behind that at number three, 6,500 contracts going up this week. The big day for those was Tuesday, nearly 4,000, 1,800 today, and about 600 on Tuesday. It's like back and forth opening to closing for most of these options I just mentioned here throughout the week. Let's scroll a little bit. Usually in WTI, you can find some intriguing stuff if you scroll down a little bit. What I'm not seeing, listeners, which is also interesting, is not as much of the, shall we say, nonsense verticals out there. May 105 is actually trading pretty actively this week, doing nearly 5,000 contracts. All of that almost on Wednesday, 3,500 contracts on Wednesday, opening there. Trying to see if it was the May 95, 105, because they were pretty active. About 4,200 of the 95s have traded this week and 4,800 of the 105. So it doesn't quite line up, but it's close. A day for day out here. So there could be some 95, 105 vertical action going up out there in May. In which case, those are interesting to see, much better than those ridiculous 1 point wide verticals we were seeing going up for a ridiculous amount of size for quite some time out here in WTI. It seems like, at least for the time being, those have exhausted themselves. If you want a little bit more interesting paper, how about the pars out here? These are June. The June par is doing about 3,000 contracts as well. 2,200 on Tuesday, and the rest scattered throughout the week. Looks like folks are bailing on this one, though, because that was mostly closing there on Tuesday and throughout the week. So maybe some folks deciding the par strike by June, a bit of a bridge too far. You know, if you go a little farther out, though, always some secrets lurking on the far portion here for WTI. That is the case again this week. We have the 120 calls in Dece of 2024. Doing 5,500 contracts this week. Almost all of that was on Tuesday. 4,900 all opening, and the rest kind of scattered throughout the week. Worth noting, the 110s did also go up 1,500 times on Tuesday, and the 90s went up 1,000 times on Tuesday. So the 90, 110, 120, 1,000 by 1,500 by about 5,000. Those numbers don't make any sense if that is the case, but it is weird to see all of this Dece upside paper going up all on Tuesday and it not be related. But again, 1,000 by 1,500 by 5,000, not exactly a ratio you see very often. Worth noting, the 110s also did trade today, 2,400 times today. Looks like maybe a 110, 135 vertical went up about 2,400 to 2,600 times today out there also in D. So D's of 2024 putting up some upside numbers. You like those levels? You like anything north of par by D's of not this year, but next year, listeners? Obviously, a long way out to go on the term structure. Anything could happen between now and then. You like above the par level? You like maybe hanging out where we are? You like below for this time D's of 2024? I'm curious. Hit us up. Let us know. All right, Dan, we've hung out in energy for quite a while, but there's other stuff lighting it up out there this week. Where else should we head on our movable options feast this week, sir?
Well, it seems like before the day is done, we should take a peek at those equity indexes. What do you think, Mark?
Oh, is something happening in equities? I was unaware, sir. All right. Off to the equities we go.
It's time to explore the volatility swings, skew changes, and hot options trades in your favorite indices. It's time to talk equities.
All right, everybody, to the wonderful and these days topsy-turvy world of equities we go. Man, so much going on just intraday out here these days, listeners, that we could do a whole show. We do multiple shows all about equities and volatility throughout the network, listeners. So if you're not checking those out, you are missing out. Right now, head out of the energy asset class, go down one slot to equity indexes, and go over to U.S. Index E-mini. And we could start in the E-mini S&P 500. And where we go from there, who knows? As we kicked off the show, listeners, vol looking a little bit firmer this week. Obviously, some of that coming in as the markets have changed direction today now. But as we kicked off the show, we were at about a 21 3/4 in VIX. That's up about exactly 3 points from where it was this time last week. The vol of vol, so VVIX at about an 89, up about 3, almost 4 points from where it was this time last week. And vol Q, the at-the-money vol of the NASDAQ, at about a 26 when we kicked off the show, up about 3 1/3 points. So that puts that VIX to vol Q spread right around a 420. That's about a third of a point wider than it was at this time last week. So vol net up on the week, obviously, after some shocks to the system earlier this week. Had the worst day of the year so far in the equity markets earlier this week. So we can see red on the screen, Dan. It is not impossible. Equities can't just go up in 2023. They do go down. So let's start there. What were your thoughts on that massive sell-off we saw earlier this week? And then, Dan, we are playing the whipsaw game today. We were selling off pretty hard earlier this morning, off about 0.33%, got down to about 39.70, I believe, in the S&P. As we were recording our last show, it seemed like the worm was turning a little bit. And as we are talking now, Dan, the S&P up 0.5%, back north of 4,000. So we are once again playing the intraday whipsaw game, Dan.
We sure are. That was a good summary of what's been happening. And excuse me, I think the last few days, hold on, sorry. See, it just chokes me up thinking about this.
You get moved. It's emotional to you.
Yes, it is. But it's that fear factor. That's really what we're seeing. If we look at that broader picture, what is going on out there? Is our economy in the dumper? No, it kind of seems to be hanging in there. Some of the economic numbers we're getting aren't too bad. Even today, if you look at the state unemployment filings, that was down 3,000 to 192,000. So what does that mean? It means that we have continuing to have a tight labor market. If we look at what the Fed's trying to do, excuse me, what the Fed's trying to do is they're trying to get inflation down, right? It's a typical tug of war that we have when we have some inflation. So the Fed's job is to get inflation down. They want full employment, which we have, and they want stable prices. You could debate that. And they also want low inflation. So what do? They need the increase. It's one of the tools. They have 3 tools we want to remember the Fed can use to adjust interest rates. One of them is they can change the reserve requirements at a bank. How much money the bank has to have in reserve. They need to hold. They can't lend out $1. They can lend out, let's say, 85 cents, but they have to keep 15 cents in the bank. So that's one thing they rarely change that. But the other two tools that they have is they can buy and sell securities. A lot of people say the Fed prints monies. The Fed doesn't print money. The Treasury Department does. But what the Fed can do is they can increase and decrease the amount of money out there. And one of the tools they have to do that is buying and selling government securities. There are 22 dealers that deal directly with the Fed. So if the Fed says, I'm going to sell you securities, Treasury bills, and other instruments that the Fed has, they're going to sell the securities. These dealers buy those securities. So they need money to buy those securities. And it takes money out of our system. If the Fed says, hey, you know those securities I sold you, I'll buy them back. And when they do that, they're buying them back. They're giving money back to those dealers. So they're adding money to our system, that pot of money that we have. The other one that most people think about is changing the discount rate, which is what banks charge each other for overnight loans. When they don't meet their reserve requirement, they can go to another bank and say, I need X million of dollars overnight. They charge them a rate, and next day they give that money back. So that's the process that we're dealing with. But where is this fear factor? And I think it's higher in the United States than it is in Europe if you look at their equity market. But staying here. So the fear. Well, the fear is, look where the interest rates are. We're approaching 5%. And if we go back to late 90s, remember the dot-com bubble? And in 2000, the Fed got interest rates up to 6.5%. And at 6.5%, credit choked off to the dot-coms and the market started to tumble. The Fed doesn't know what interest rate's going to do that. So they're sensitive to that. But anyways, it did. And we went down to 1% in 2003. Then, the Fed again's concerned about inflation and it starts increasing that interest rates again. And we got to 5.25% to 2007. And we had some people who had subprime mortgages that maybe at a lower rate, they could afford those mortgage payments. But at if I have an adjustable mortgage, at some interest rate, if I can barely make my payment, I will default. And that's what started to happen. And we had excess amounts of credit default swaps. The point is, that was 5.25%. And the Fed doesn't want us to have a recession. But that's where the market, that fear factor comes in, right? And that's what we're seeing feeding this. So we get good economic numbers and the market dumps because they're concerned that the Fed can say to themselves, which is kind of what they're saying, well, if the economy is still strong, the labor market's tight, the economy can handle us increasing interest rates. And now the issue is how much and how often, the velocity of that change. So the market's expecting it. And we had the Fed basically coming out on Wednesday saying, something, we think we may throttle back on the frequency of interest rate increases. That's comforting because it takes 6 months to 18 months, depending on what part of the market you're talking about, for our economy to feel that change in interest rates. So that's the scary part. And again, the Fed doesn't want a recession, but they also don't know the magic number. All they know is we have a solid market, it appears, and they need to do something about inflation. Therefore, they are going to increase it. And maybe they'll cut back on the frequency. And whether they do 25 basis or 50 basis points, who knows? Both of those are kind of up in the air. But the expectation is now they are going to be doing more. And so these positive economic numbers creates that fear factor. And I think that's what we're seeing in the market. But if we look at today's action, as you pointed out, Mark, we were falling out of bed earlier in the morning, but we bounced. And the structure that we have here, from the way I look at these candles, it implies an update going into the weekend, just like you and I were talking about with these other markets. Do people want to go home short? I mean, the last few days have been down. Do I want to go home short over the weekend? I love Fridays because they force people to make a decision. Do I keep this position? Do I get into a position? Do I get out of my position and get back in on Monday? And in futures, you don't have a whole weekend of exposure. These markets are going to close on Friday, but they open again Sunday night, not Monday morning, 5 o'clock Chicago time, Sunday night. These futures markets that you and I have been talking about, they open again because Sunday night, 5 o'clock Chicago time, is Monday morning in Asia. So your trade date is not Sunday, it's Monday. And that's where that Monday trading session begins. So it's fascinating where you're setting up. Right now, I'm looking for an update on Friday. But here's the deal. If by Tuesday of next week, we are not trading above 40.80, then chances are we're going to be going sideways. So the market's really, it responds instantly, as you and I have seen, right? When the Fed says something, it responds instantly. But, our economy doesn't respond instantly. There's that lag effect. Just like if we think about precious metals, we see the market responding to certain things on the equity world. The commodities, the gold itself, doesn't necessarily lead or lag the equity side of the gold market. So it's a fascinating relationship. But right now, for these indices, across the board, the NASDAQ, the Dow, our friend Mr. Russell, and the Russell didn't break as much as these other indices. They're all implying the possibility of a move to the upside. We're seeing that loss of momentum and rejection of lower prices. So it's a very interesting setup. And I can't wait until tomorrow to see how this plays out.
Yeah, a lot to unpack out there, Dan. We're talking about these intraday whipsaws, it seems like, all the time. A lot of people are starting to maybe point the finger back at these 0-day, these near-dated contracts as really exacerbating all these intraday swings. They are, after all, gamma bombs, Dan. I'm not sure if you heard that. That's the new term that all the cool kids are using, coined by us here on the network out here. But what are your thoughts about that? You think this just massive explosion of all same-day trading is exacerbating all this intraday vol we're seeing right now?
I don't know. I don't know if we haven't. That's a very logical point, though, to be raised. And I like the term gamma bomb. I like that one. But I would say today's action, Mark, it's what I call consistency of behavior. In other words, if you and I go back to like the middle of December, going forward, and the beginning of the year, we were right at these levels. So when we've come down to these levels that we are from, 32, I'm sorry, I was in my mind, I was thinking about the Dow. But if we look at the S&P, the Dow is a little different animal. But if we look at the S&P, just a few weeks ago, it was in January, we were right at these levels and we bounced. So buyers came back in. And from that level, we had the next 5-6 days, the market was up. In fact, it put the high in that we've seen over the last few weeks, near that 4,200. So we have the same kind of situation setting up. Whether we've seen that increase in volatility due to that, I wouldn't discount it. I think it's a possibility. I just haven't seen enough to say, yeah, there's a correlation there because of some of the behavior we've seen before. That's why I'm saying that.
That is still the open question, right? What are the unintended consequences of so many people trading these things now? We just don't know yet. There's a lot of interesting analysis to be done here. These are the $1 million questions in the equity and indeed the volatility markets right now, listeners. Looking at the equities here, it's just a palooza of near-dated paper here. And as you would expect here today, S&P hanging out now, 40.21. So we're continuing. Looks like that rally a little bit after dipping below 4,000. And as you would expect, it was the 4,000 puts going away in a couple of minutes. So again, 0-day paper lighting it up today. Over 40,000 contracts have gone up this week on this strike, including about 36,000 today. 36,500 of these things have traded today. Listen, I was doing some interesting scans while Dan was talking, because Nick and his team over there at QuickStrike have really built in some pretty cool additional tools out there. And I was playing around with those a little bit, including looks like a block of, or a big chunk of about over 25, nearly 26,000 of these 4,000 puts traded this morning for around 7.5, almost 760. So that premium has been annihilated now. It's down about $7. It's down about 59 cents. At least it was when I ran this report. I'm sure it's coming even more since then as we continue to rally. So we're seeing a whole bunch of premium annihilation on these 4,000 puts. So did they buy those as we were swinging below the 4,000 level, in which case they're left holding the bag? Did they sell those, in which case they're sitting on a small fortune? Either way, aggressive trading out here, listeners. But again, when you hit these psychologically important levels like 4,000, when you're whipping around them intraday, then interesting stuff. Speaking of which, that might be a good question of the week to come back to maybe next week. Do you guys and gals out there think all this 0-day trading is increasing intraday volatility? Producers, make a note. We'll come back to that next week for our question of the week out there. What else is lighting it up out there? We got the normal explosion of nonsense, the 34 half puts doing 28,000 contracts. Always love that fun stuff, listeners. We've got the 3,400 puts going out in a few minutes, 23,000. So let's scroll past all that noise. 16,000 of the 40 half calls have traded. These are the ones expiring in a few minutes, including 13,000 today. So you might say, hey, I hope you're overwriting the hell out of those. And you probably would be right. But then again, we've seen aggressive moves going into the close. So in fact, I'm looking here, it's like 7,800 of the 40 half calls traded earlier this morning for prices around 260. So right now, it seems like the winning trade on those was to sell them. But again, anything could happen in the next half an hour or so. Just crazy intraday stuff. 4,100s also trading today. Those traded for $1.31. Those are a little bit farther out. Yeah, those are a little bit farther out. Okay, those aren't just today. But still, just a lot of paper going up, very near dated, very close to home as we're whipsawing around these very strategically important and psychologically important levels. We're also noting, listeners, it's not all stuff expiring today. If you go out 8 days, someone trading about 12,000 of the 3,700 puts. It's like this was all closing, though. Paper had taken off a bunch of them, including 8,000 on Tuesday. So maybe they decided 3,700 not happening the next week and change. They're getting the hell out of Dodge. Also worth noting, 3,970 puts in March going away in 15 days. Did about 10,000 contracts this week. We go even farther out. We go out to March itself. So you got about 21, almost 22 days to go. The 4,000 puts also pretty active out there, about 18,000 contracts. Again, the big day for those was Tuesday. Of course, that was our big sell-off day, so folks piling into 4,000s there. Certainly makes a heck of a lot of sense. Actually, looks like they were closing slightly that day, so maybe a little bit of back and forth going on out there. And worth noting as well, not to be outdone, our friends slinging the boxes are back. The 2,100 box going up going up 22,000 times in March. So there we go, listeners. There's a nice little 88,000 contract amongst friends out there. So yeah, 2,000 point wide box. Tearing it up out there. Dan, we're coming up against it, but never let it be said that we don't listen to our listeners, especially our pro friends out there. If you want your questions bumped to the top of the list, then theoptioninsider.com/pro is the place to go. Just like one of our pro members, Age of Del Aquarius, when CME tweeted out right before showtime, which futures and options product will make the list today? He replied, it's got to be interest rates and Fed watching this week. So never let it be said we don't listen to our listeners. A little bit of the old rates to wrap us up here, listeners.
The Fed, the yield curve, inflation fears. How are they impacting options activity and volatility in your favorite interest rate products? Let's find out as we explore the world of rates.
All right, welcome to the world of rates. Go into that drop down, listeners. Pop out of equity indices. Go into U.S. rates. Unfortunately for Age and all of our rates fans out there, I know he's one of them. He's a big rates guy. Only the Ultra 30 are really making into our movers and shakers this week. That's not exactly a rock'em sock'em robots product. But Dan, you did just kind of talk a little bit about the Fed and what they're up to out there. But anything else you want to add about all things Fed and what's going on in the world of rates? Have at it, sir. The floor is yours.
Well, thank you, Mark. I guess and you're right, we had a chance to chat a bit about the Fed. I think if we look at structure in terms of the notes and the bonds, 30-year bonds and the 10-year notes, I was looking for weaker prices. Remember, we have that inverse relationship. As yield goes up, you look for prices to go down. And the thing to keep in mind, if you're not familiar with those two products, we have a 6% yield on those products. And that's why you have that inverse relationship. If the yield starts going up in other products, those instruments become worth less in terms of the futures contracts. But here's my point. I've been bearish on these markets, on the notes and the bonds. But yesterday we slowed down. Today we have a bouncy low, just like you and I were talking about in the equity world. It's what we're seeing today in the bonds. They fell out of bed a bit, but now they're bouncing right back up. Although I prefer not to see this, but right now the notes and the bonds imply an up day for Friday. And the objective in the bond market, you'd want to see it closing above 126 even. And in the future, the 10-year notes, you'd want to see it closing above 112 if you're looking to get on the long side of those markets. Follow through on Friday would be critical, and that could set up next week. If we don't close above those levels, then I'm looking for a softer week next week in those markets. So I think tomorrow is going to be an important parameter as you and I look at these interest rate markets.
Let's check really quickly, see what's going on out there. You mentioned the 10 years, so we'll hang out there. Always an option stalwart. Even on this truncated week out there, doing about 2.5 million contracts out there. So nothing to sneeze at out there in the 30-year. And of course, like a good equity these days, a good chunk of that is in the March contract that expires in about a day. So intriguing stuff out here in the 30-year. Yeah, 36% of the paper going up in that contract expiring. So near dated paper. All the rage, even in the 10-year. You might ask, what is the vol out here in the 10-year? We can't talk vol with something that's going away in about a day. Even still going away in about a day, it's only about a 9. You go out a little bit farther, let's say a week, you got about a 7.25. So 10-year never been the bastion for vol or for skew, and we are kind of coming up against. Let's look really quickly. 111 puts going out in about a day, listeners. That is the big dog out here in the 10-year this week, doing 152,500 contracts. The big day was yesterday, 49,000. Actually, I take it back. The big day was Tuesday. 63,500 going up on Tuesday. That's more than some of the complexes we're going to talk about here. 49,000 on Wednesday, 39,000 today. Back and forth opening to closing throughout the week. So a lot of hot action. By the way, where are we right now in the 10-year? 111 and about an eighth. So that is the at-the-money strike out there. It's no surprise that it is lighting it up. Followed right behind it by the 110.5 puts doing 96,000 contracts. Kind of a tie between Tuesday and today, both close to 33,000 contracts, 29,000 on Wednesday. Looks like mostly closing throughout the week on the 110.5 puts. And then right behind it, we got the 112 calls. So a little bit out of the money calls, doing 88,000 contracts. The big day was Tuesday for those, 39, almost 40,000, 33,000 today, 15,000 on Wednesday. All right, listeners. That music means we've run out of time to talk rates and just about everything else here on the show today. But a fun one, a lot lighting it up out there. just another very biased week in terms of the movers and shakers. So hopefully you like red. Of course, if you're in the equities, it seems like they've bounced now. So maybe you like a little bit of green out there as well. And Dan, before we go, if folks want to reach out, check out all the vidges you've got cooking up for the people, where should they go? What should they do?
Well, they could go to dangramza.com. It's my website, and I have a free daily video talking about some of the markets that you and I have been exploring today. I take out of 22 markets, I pick a variety of them for us to look at. And if you've never looked at futures, that's a place to begin, is just watch them. So if you're an equity trader and you wondered about these markets that seem so volatile that Mark guides us through, watch them on a daily basis, and that video can give you that kind of reference. Or if you only trade equity indices and you're wondering about crude oil or gold or some other market or agricultural markets, again, a place to begin is just watch them. So I share my ideas. There's red and green lines which represent buy and sell levels. These are not buy and sell recommendations. I'm just sharing how I view these markets. There's also a course there and a more advanced video which goes through each of the 22 markets. But anyways, that may be a place to check out that type of information.
All right, dangramza.com, Gramza.com. If you need a helping hand to these crazy whipsaw markets, and hey, who doesn't? You can do worse than checking out all the info Dan's putting out there. And of course, you know where to go if you want to see the hard numbers, just the facts, ma'am, for what's going on in these futures options markets. CMEgroup.com/TWIFO, TWIFO. That's going to do it for us on TWIFO today. It's also going to do it for us on the live side of the network today. But never fear, back again tomorrow, noon Central, 1 p.m. Eastern, with Volatility Views. Going to be talking some great VolQ, VIX, all sorts of fun with our friends over there at NASDAQ. Then back again after that for all of you pro folks out there for all the fun we have in options oddities. It's a good whipsaw week that usually translates into some fun in the land of oddities. If you want to check that out for yourselves on the oddities side, you want to join all the fun, all the giveaways, all the live, everything else we do, theoptionsinsider.com/pro is the place to go. And then, of course, we'll see you back here next Thursday, another episode of This Week in Futures Options. Stay safe out there, everybody.
This Week in Futures Options is brought to you by CME Group, the world's leading and most diverse futures and options exchange. CME Group's markets help individuals and businesses around the world manage risks and seize opportunities. CME Group offers the deepest and most liquid options on futures across all asset classes, including interest rates, equity indexes, foreign exchange, energy, agriculture, and metals. For more information and educational resources about futures options at CME Group, visit cmegroup.com/options. This broadcast is intended for informational and educational purposes only and does not constitute trading advice or the solicitation of purchases or sale of any futures or options. The rulebook of the applicable exchange should be consulted as the authoritative source on all current contract specifications. You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.